All right. Good morning, good afternoon, everybody, and welcome to today's webinar. Today, of course, is February 22nd, 2018, and I have to say it's very nice to be back doing this. This has been a rough year for my family and myself, uh, so I just want to say again that this is just a pleasure to be here. Anyway, today I want to go over the longer term view, some of our shorter term charts, and then something at the end where we talk about, I'm going to show you how to play that kind of what I call the dead cat bounce, uh, and show you examples of charts that actually made some nice moves off this tremendously oversold condition we had. So let me jump right in. Um, Starting as always with the monthly charts. And again, now the key here is this. Again, even though we've had this bit of a sell-off, we're still above the upper band on the monthly chart. That level is 2535. And as of the other day, we're still above 2700. So again, we're well above it. For the Dow, that level is 22,002 roughly. So we're almost 3,000 points above the upper band on the Dow. For the NASDAQ, it's 6438. Upper band is 7234. So again, we are still about 10% above the upper band on the monthly chart. Now, again, as you know, we have various other upper band formations on the weekly and daily, and we did breach it on the daily, okay, at least for the S&P 500. So again, I don't really believe that a major bear market happens until we see a breach of the upper band on any one of these longer term charts. So that would be the monthly. Okay. All right. Now here's gold. Okay, gold, as you can see, has been in a really long-term trading range. Okay, clearly defined horizontal pattern here. So again, we're going to either break out or break down. I don't know which way just yet. As you can see, we're kind of testing the upper limit here this month. Here's the light grade crude. Again, this is the spot price. So when you look at this, we are above the mid-band. And as I said, the mid-band was offering support, or actually resistance, and now we got above it. So it should offer support. That level is 56.16. And then we look at Apple upper band, roughly 155. Even the other day, we closed at 172. So again, back above the upper band. So again, this is another stock that individually is showing a lot of strength. Now we scale down to the shorter term view, okay? And this is what gets very interesting. You can see down here on the 9th, we got down to the lower band, actually just breached the lower band on the S&P 500. The key level that we came back to retest, and again, I do want to point this out, okay? The S&P 500 breached the lower band, rallied all the way back up to the mid-band, okay? Basically was repelled by the mid-band, and now today is trying to regroup and retake it. So again, this is a very, very interesting formation because this is the oversold condition that we really want to isolate. And at the end, I'm going to show you how we can try to isolate that. And then more importantly, kind of pick some winners here based upon playing that bounce. Okay, so anyway, that's the S&P 560. We look at the S&P 530, you can see what went on here, okay? We breached the lower band back here, breached it again, rallied back up, and we came right back to the mid-band a few days ago. So this was a tremendous move in a short period of time. All right, now we look at the VIX, okay? Here's the daily chart of the VIX, okay? We had the massive jump up above the upper band. Essentially, the VIX stalled around the 50 level. Now, what's been kind of interesting is the past 2 days, it was back beneath the upper band. The upper band is 2111 or 2112. Yesterday, even though it rallied back, it closed underneath that level, closed at 20.02. So, at any rate, the point here is this, simply this, that upper band should offer resistance, okay? If the VIX took it out again, I would expect the market to head back down. So again, this is a very interesting setup because we're literally sitting, as of yesterday, literally sitting right at the upper band on the VIX. Now we scale down to a 60-minute chart, okay? And again, here's what's kind of happened here. I want to pull this up. Okay, we had the breach back here, okay, which told us that the VIX should retest the upper band. Not only did it retest it, it took it out, continued higher. Now we had the pattern where we had the failure here. And it closed back, this bar actually closed underneath the upper band. And now it came back to roughly support line at the 200, and it was trying to rally from that level. Okay, which was, by the way, essentially down to the 1875 line. I do believe 25 would be resistance. And then we go back to a shorter term chart. Actually, no, this is the 60-minute chart. Now, this is actually a very interesting chart because I don't have any lines drawn on it. I think the significant thing here is, this arrow on the left side. Okay, the arrow is pointing to or alluding to the fact that the 60 crossed in an uptrend. So once the the VIX crossed into an uptrend on the 60, the trend changed to the upside. Okay, and that's really, that event and a couple other things I'm going to show you later are the indication that we should have a market pullback, okay? Now again, we can, and I've said this many times before, we can relatively predict a pullback, all right, when a turning point in the market should come. The thing we can't predict is the depth of that pullback. And again, this sell-off has been kind of another interesting example of exactly what I'm talking about, okay? You know, we wouldn't have expected a 300-plus point sell-off, but it happened, okay? The thing we can predict is we can predict that there's a likelihood of a reversal in the market forming. All right, now I go to the QQQ. All right, QQQ stopped right at the lower band on the 60, which was virtually right at the 150 level. And that's where the market had rallied from. And again, stronger than the S&P. We know that because this took out the mid-band, and the S&P did it. And then here's a shorter term view. So yesterday we were still above the mid-band on the 30. We would expect that 164 level to offer support. And it did close above it yesterday. Here's the TLT. The TLT, you can see here, again, it's been a tremendous downtrend. Came down to the major 117 line, just broke under that yesterday. The 115.63 line is, to me, a major support line. If it breaks under that, TLT should head lower. So again, this will be very interesting because you see yesterday it's starting to try to reverse. Now we look at the GDX. GDX crossed into a downtrend on the 60. All right. The key level at the moment was 2188, closed just under it yesterday. So again, I would expect that to be resistance. And then we look at the 30-minute. Here's the cross down to the downside. And look at this rally. Came right back to the mid-band and it stalled. So again, ran from lower band to mid-band. And then we look at Apple. Here's the 60-minute chart of Apple. Now again, Apple was very intriguing because, again, we had two breaches of the lower band in this downswing. And then the swing on the 9th was a beautiful run all the way up to above the mid-band on the 60. peaked out at roughly 175. So again, a beautiful swing off of this oversold condition. Now, again, I'm going to show you how we can try to time the market later to say, all right, well, on the 9th, this kind of made sense to buy some calls there or buy the stock. And then here's the 30-minute. Now you can see the 30's crossed in an uptrend. So the oversold condition off the 30 should be bought. And then we jump at the XLE. Now this XLE is kind of interesting because we tested the mid-band. Mid-band is 67.25. Yesterday it broke under and closed underneath it. And I believe today it's trying to recoup that level. Here's the 60-minute chart. Again, broke under the lower band. 65.63 is the support line. Really only ran up one level here in a downtrend, okay? So today we're starting to get the reversal. Now, trading the bounce. Now, how do we do that? How can we project the bounce? All right. Here's what I like to do. I like to look at the selling climaxes. You know, I consider a selling climax anytime when the down to up volume exceeds 9-to-1 on a daily chart. All right. Now, as you can see from this chart, there were actually 3 during this down move and this down swing. And again, something I need to point out here is this. The S&P was trading above the upper band here on the daily chart. The fact that it did that basically tells us that it's probably not a really good idea to consider initiating long positions there. Okay. And we didn't. Okay. And nor would I suggest doing that. I mean, the odds favor, you know, a pullback to within the upper band. All right. And again, the entry can be very simple. You know, wait till it closes back inside the upper band. Now, had we done that, right, right there, it closed back inside the upper band. So it's roughly 28.50. So the market dropped 230 points off that particular setup. All right, now we scale down even more. Here are the 3 selling climaxes that the market had during this downswing. You can see on the second, it was 13.61. So that means, again, there was almost 14 shares sold versus bought in that one day. And then the next day, we had that huge selling climax of almost 31. And then a few days later, we had a third. And again, I don't remember 3 selling climaxes, quite frankly, in one downswing. I don't, for the life of me, I was trying to see if that's happened. I don't recall it. You know, usually 2 will turn the market. In this case, we had 3. Okay, and then what happened here? On the 9th, we had what I would call a hammer bar. The market opened, made a lower low, came back to close slightly higher. And that was the signal to perhaps start nibbling on the long side. Now, here's something else I want to show, because we haven't really discussed this in a while. Okay, but here are the sentiment indicators I look at. Here's the bullish percent indicator. You can see here it peaked out at 84, stalled at roughly 82, roughly 83%. Now, typically, when these indicators exceed 80%, usually it signifies a market top, okay? And again, this is a contrarian indicator. And look what happened with this indicator. Stalled at the upper band, dropped all the way down to below the lower band. You know, dropping from roughly 83% down to 40. That's over a 40% drop in a very short period of time. So you can see how quickly people basically turned and went from euphoria to dismay. And here's the percent of stocks above their 200-day average. That peaked out at over 80% here too. And like the bullish percent index, it dropped like a cannonball down to under 55%. So again, those indicators tend to tell us when the market's getting really frothy. And that's exactly what happened, okay? The problem for us is, we don't know that it's going to be a move of this magnitude in such a short period of time. But again, it does happen. Now, to trade this bounce, what do we do? Now, we have a couple of situations lining up. Number one, we see all the selling climaxes in this down move, okay? So now, the easiest way to participate in a bounce here is to look for stocks that are below the lower band on the 60-minute chart. And here's a couple of examples. Like here's Cintas. Okay, you can see that stopped down to 147, and that rallied back to roughly 168 in about 5 to 6 days. Now again, when the stock is under the lower band, okay, like this stock is, to me, the price objective is back to the mid-band. And it happened here that it closed above the mid-band. So that should tell you that, you want to probably continue to stay long. And it's probably going to head higher. All right, here's one Jack in the Box that came back from the lower band and stalled right at the mid-band. And here's Wix right at the lower band. And look at this. Scream right through the mid-band and continued up to above the upper band. So this was a tremendous move in a short period of time. Here's Stamp. Okay, again, underneath the lower band, came right back to the mid-band. Okay, and that's where the bounce happened the other day. So again, you can look at this. And by the way, I'll point it out here. I mean, because we were looking for an overall market bounce, okay, because of the number of selling climaxes. And again, the 9th was the reversal in the market. So if you look at this, the next day, you actually have opportunity to get long here. But say you missed buying below the lower band. Well, one of the ways to initiate a long would be to just wait until the MACD turned positive. And I think it turned positive here. You could have easily got in at 175. Anyway, that's what I wanted to cover today. Again, I would, again, by combining all these factors, all right, that's what makes this really interesting, okay, in terms of the predictability of being able to determine, if you will, when it's, if you will, safe to enter the market. So let's just take a quick look at some of these things. All right, Zebra. These were some companies reporting today. All right, now look at Zebra. Zebra had a really strong move. It's up 12%. Scale down to a 10-minute. Now, I closed above the upper band. I mean, this right now isn't all that exciting to me, okay, because, it basically screamed up and ran and kind of hit resistance. So what would make this exciting is if it could close back inside the upper band on the 10. And then if it failed to continue to move lower, it's possible you can pick up some points here. Very interesting setup, though, but one to follow nonetheless. And then we got the Stericycle. I saw they sold off. Okay, look at this deal. This sold off This sold off from the gap. Gap down, closed below the low, moved down a couple of points. Now it's trying to firm up. Let's take a look at a 30. All right, there's the 30. All right, so we've had a close below the low of the first bar, all right, which immediately tells me that I might want to be bearish on this. So what I'm inclined to do on Stericycle is to look for the rally and then try to get short. So that could be a very interesting trade setup right there. Now, what would invalidate this is a close above the high of the gap bar. So again, some of these, earnings moves, you got to be really quick. Watch the gap setup and then just jump in on them if you want to go with the gap. But usually these moves are fairly short-lived. What else reported today? Let's look at Equifax, EFX. All right, really nothing. Kind of a modest move. So I'm not really interested in it. VMI. All right, so this had a small move to the downside. Nothing really to write home about. Okay. Anyway, that's the material I wanted to cover today. Again, the key is to know when the market, or you have a reasonable expectation the market's going to turn, right? Because when it does do that, and we can time it with the selling climaxes, then we can go in and look at some of these individual stocks that look like they're going to bounce, and that's exactly what happened here during this down move. Let's take a look at the VIX. All right, so look at the VIX. VIX got repelled and is down back below 1875. All right, so now at this point, 1875 should be resistance. All right, well, that's what I wanted to cover today. I do appreciate everybody being here, and thank you very much. And I'll see you again in 2 weeks.